Hey, what's up, guys? And welcome to Funny Money with Charlie Brown. So, today I want to talk about a lot of things, a lot of catalysts in the market. There's a lot of bears, there's a lot of naysayers. Some people are saying, negative things, negative catalysts. Are the Federal Reserve going to raise interest rates? Are they really going to stick to it this time? There's a lot of pundits out there that say they are going to stick to it. There's a lot of people that say they're not going to stick to it. And there's a lot of bears and negative naysayers on the crypto market, stocks in general, asset classes of all kinds. There's inflation going on. There's a lot of things going on in the market right now. So I wanted to talk and make a video. I know I haven't made one in a while, but I wanted to just basically break down kind of my thoughts and opinions on what everything is going on in the market, and just basically break it down so you kind of have a different perspective. I'm in the military, so all I've done is basically while I'm in the military is obviously work hard in the military. But I've saved money, I've bought real estate, I've invested in crypto, I've invested in stocks, retirement plans, all kinds of stuff like that. Been able to take advantage of government programs and loans and things, and VA loans and things like that, in order to try to make the best financial decisions. So if you want that perspective, and this sounds like something you'd be interested in, stay tuned because I'm going to talk about it. So, anyways, the Federal Reserve says that they're going to raise interest rates because now they realize that, things are getting a little overblown. Inflation's way higher than it has to be or than they wanted it to be. But I don't know if that's the case. I guess they wanted a little balance there. Basically, they wanted, inflation to go up a little bit so that asset prices could stay lofty. And one thing that really disturbed me today that I heard is, and we've all known this is the truth, but one thing that I've heard today that really disturbed me was the fact that there's a lot of insider trading going on, not just with, Congress, but, people that are around Congress, people that are in Congress, people that are in the government. There's some judges out there that have done the same thing. Not all. I'm not gonna blanket everybody and say stereotype, but there are people that are making money based on insider information, insider trading, and Jerome Powell, I think, wants to do the right thing, in my opinion. But it's been really difficult because you have all these politicians that are basically, kind of putting him under the gun and saying, hey, look, you got to do what, to be accommodative, just for political reasons, political gain, but it's not for the best interest of, society and what we call as America, today. So these are the things. So Warren Buffett always says, inflation, or no inflation, it matters about prices, it matters about value, and he's sitting on a lot of cash. And a lot of people have actually ignored him lately. I haven't heard his name in a long time, but I want to bring him up here because the thing that really strikes me about him is that he's saving a lot of money. He's got like billions, like over $100 billion in cash. The last time I checked, I think it was 150. You guys can fact check me on that, but the last time I checked, he had 150 billion in cash, and he's just hoarding. He's just stocking, and he's just waiting around. And this kind of reminds me of the period of right before. There was a period of time right before the 70s. I think it was like the late 50s or the early 60s that he I think it was 56. I want to say. That he stopped buying stocks. He closed down his practice. And the reason was because he said, the market didn't make sense to him and he just didn't want to lose anybody any money. So he's just going to sit it out. And then I think around, the early 60s is when he started buying back in again, once things started coming down a little bit. And then after that, obviously things rose. And then you got to a point in about the early 70s that, kind of analogous to this period we're in now, where the things that benefited the most were not even stocks. Stocks stayed the same for a while, for almost a decade. And the things that rose the most were commodities and gold. Gold was, that's how Ray Dalio made his fortune, starting out at least. He's obviously made a really smart decision since then, but starting out. And, so real estate did really well as well. So there's another thing that I heard. There's people that the negative, the naysayers about the crypto space, and I've kind of geared myself more towards crypto just because it's a little bit less, in my opinion, rigged, as far as the people manipulating it with the interest rates and things like that, and it's just a little less manipulated. The one thing that really does scare me about it, though, like a tiny bit, is the fact that there's no businesses behind them. Now there are technologies behind them, so like they're kind of operating as, as like a tech startup type of deal. But it's just a little unnerving. But that's a good thing. And the reason why I say that is because every time that there's been a crash, it's always when the last bear throws in the towel that you see everything, come down from the lofty valuations. And we have a lot of scared people in the market right now. We have a lot of naysayers. There's a lot of uncertainty, and you've seen crypto prices have been going down. Now, is this the start of an actual crash, or is this the actual, just another buy the dip opportunity? Now that I don't even understand. I don't even know that. I don't think anybody really does. It's kind of like the stock market. Is this the big one or is this not? As far as crashes go, the best thing to do is just dollar cost average and the things you truly believe in, and stay away from the Wall Street bets type of deals. Even though I know people that made a lot of money in that, stay away from that. Try to invest in the dollar cost averages of things that you truly believe in. Like, say you like Amazon, even though it's been flat for a while. Amazon's a good one. Google's a really good one. They're the ones who have YouTube. They're making a ton of money off YouTube revenue. So there's these companies out there. Apple's a good one. There's these companies out there that really are awesome companies you can invest in, and it just kind of is a little bit, keep your money safe type of deal. Now, one thing that I thought about today, as far as like hedging, I'm a really big Bitcoin person. I have Bitcoin, I have Ethereum, I also have a couple little smaller ones like Cardano, things like that. I have a tiny bit of Dogecoin, very little bit amount of that. But I made a lot of money. Well, relative to my income, I made a lot of money in Dogecoin this year, and I have some friends that did the same as well. So it's not to say that you can't speculate and make some money out there. You can. But one of the things that I thought was interesting, a good way to hedge your Bitcoin holdings or your Ethereum or whatever your crypto holdings, is with real estate. Because we know in the 70s that real estate went up through inflation, right? And everybody's worried about this inflation, and people always need a place to live. So I believe that real estate is going to be an amazing way to hedge all your investments, stocks, your retirement accounts, if you have gold or silver, cryptocurrencies, what you have you. And the reason why I think that is because there's a big debate, right? All right, gold and silver versus Bitcoin and Ethereum and all the other cryptocurrencies and all that, or stocks, right? So in order to just say, hey, you know what, like I'm going to have some of this, I'm going to have some of that, like an all-weather portfolio type of deal, kind of like what Ray Dalio does, you can diversify into different things. You can diversify into real estate. And when you diversify into real estate, it's going to be a good hedge against your crypto holdings, right? Now, because there's two ways to look at, as far as the research that I've done and the videos that I've seen, there's two ways to look at your cryptos. Cryptos could be like a really high tech, a hot startup or a tech startup, tech stocks, you know what I mean? Innovation stocks, which I think in the long term are going to do really, really well. Now, that means that whenever obviously interest rates rise, then they're going to make those prices crash, right? Possibly, because that's what happened with tech stocks. But there's also the flip side of the coin there on the argument, and it's that Bitcoin and Ethereum and all these cryptocurrencies offer a hedge on inflation, so that they will keep rising as the dollar loses value, and they'll keep rising with inflation. Now, the thing that I agree with Peter Schiff on, and this is the whole thing about inflation and interest rates rising. So they're still printing, from what I know, I think they went from 90 to 60 billion dollars, and how much they're buying as far as bonds and all that. So the thing that really piques my interest is they're tapering, right? They're slowing down the money printing, right? They're slowing it down a little bit. They're still buying, government-backed securities. They're still buying that. But doesn't that mean that there's liquidity in the market still? Doesn't it mean there's a lot of money still sloshing around? I know the stimulus checks and all that, it's kind of, those are a done deal. And it does feel like things are tightening up a little bit. But, you have the Omicron virus going around right now, and you have basically all these things that are catalysts for negative catalysts, and it does feel like it's getting tighter. But the Federal Reserve, is still putting money out there. So, in my opinion, until the rates start actually rising, I know in 2018 we had the taper tantrum. Until rates start actually rising, we're really not going to see, you know, the tightening of the money supply, the shortage of the dollars, where people are like, oh no, there's a shortage of dollars. But, the weird thing about it is that, the dollar is at 94 right now. That's how high the dollar is as far as, you know, as far as interest rates go and all that stuff. So the thing is, it's just weird. It's just, you just have to, in my opinion, keep dollar cost averaging into cryptos. Keep investing in your retirement accounts. Pay off your high interest debts. Right, pay those off. Don't carry credit card balances. This is easy peasy stuff. And invest in stocks. And that's the best way that you're going to be able to do anything. And buy some houses. And now there's another video that I want to make, and it's basically how I was able to afford a Bitcoin. And I know it's a lot of people have a lot more than that. There's people with thousands of Bitcoins and people with tens of Bitcoins. And I'm not really an early Bitcoin guy. Like, I was kind of in 2014, but I was using it as a way to use to play online poker and some of these things like that. You can just use Bitcoin, to play in these rooms, these poker rooms. And that's how I started, finding out about Bitcoin. But I didn't really start investing into it until about 2017-ish time frame, and we all know what happened with that. Now, I was able to take a sale of a house that I had and the earnings and the proceeds, and I was able to put it into Bitcoin along with some other funds that I had, and I was able to, this year, get 1 Bitcoin. Now, I don't plan on selling that Bitcoin, but it's tough to get a Bitcoin because it's so expensive, and they may come down. Right now, Bitcoin was at 47,000 is the time of this video, and it may come down. So we don't know. We honestly, it's a big question mark. Anybody tells you that they know, we kind of have a gist of what's going on, but there's so many curveballs. Just like in 2018, I was shorting the market in 2018. I lost $15,000 shorting the market whenever the Federal Reserve decided to turn on a dime and start printing money again and lower interest rates again. Because I figured, all right, this is the big one. This is the crash, and maybe that's the whole game. To keep us unexpected, and then it's not appreciated, obviously, because we don't know what to do as investors, and the market's really crazy out there. It's uncertain, which makes me really truly believe that we have one more true pump before it all goes down for a while. I think Bitcoin hits 185 to about 250K next year, right? We can count on it doing a flip. So let's say we enter January at 45,000. Right? So we enter January at 45,000. I believe then next year, Bitcoin's going to be at 90,000 at the minimum, at the bare minimum. And it might be higher than that because we're due for a big pump in Bitcoin. We're due for a big bump in cryptocurrencies. This is the stagnant period where you sit around and wait, you accumulate, just like last year, right? Stocks did their thing, and everybody was snoozing on crypto, and it wasn't until, Dogecoin started hitting crazy highs, Bitcoin started hitting crazy highs, Ethereum started hitting high after high after high, that people wanted to invest. That's not the time to invest, folks. The time is now when people are not looking at it, people are just complacent, they're not thinking that anything's going to happen. Buy a property, right? Buy a house. Buy dollar cost average, whatever that means to you. It doesn't have to be $1,000 a day. If it's $10 a day, if it's $1 a day, if it's $5 a day, it's easy to open up a Robinhood account. It's easy to have a investment account that is tax deferred, like a Roth, something like that, where you can invest in stocks and things like that. And it's also easy to buy cryptocurrencies. You can do, I'm not sponsored by any of these people, but you can use BlockFi. I use BlockFi to earn interest on my crypto. And I know people that stake crypto and they make interest doing that. Binance is a good website to have it as well. So these are just some of the things you could be doing, and these are just my thoughts on the market. And if anybody tells you, or anybody out there thinks they know what's going to happen, or what the Federal Reserve's going to do, they're wrong. They don't know a thing. I promise you, they don't. Nobody does, and that's kind of why I think the OG of investments, which is Warren Buffett, he's going to show us all up. Everybody's snoozing on him. Everybody, haven't talked about him in a long time. He hasn't really made a lot of moves. He's sitting on a lot of cash, and he's waiting for an opportunity. And there's times where I wish I had the patience to do that as well, because patience is where the money's made. You could either dollar cost average because we're all human, or you could be patient, stack some cash, and honestly, I'm probably trying to do a little bit of both right now. I'm not buying anything else. I'm dollar cost averaging smaller amounts, and I'm also stacking my cash positions right now. So if you like this video, please hit the like or subscribe button to see future content. It helps out the channel, obviously. I know everybody says the whole same spiel, but I really appreciate you guys watching the video, and hopefully I can bring you guys some more information in the future. Thanks for tuning in, guys. Peace.